Hey guys, Mike here. So, hope everybody's having a great weekend. Obviously, we had a good day on Friday. We continue this grind up in the market. Another day, another new all-time high. As you can see, vol continue to get pressed down. Of course, one of your questions was, is there an update with Jim Carson about his prediction of what he sees going on? And there was, in one of his latest ones, interviews that is. So I will put that in here today, as well as you guys asked about a bunch of stocks and all kinds of different sectors. So we'll get into those as well, especially when it comes to AI, robotics, things like that. But I will say, starting off, I appreciate all your feedback yesterday when I ranted, and I appreciate you letting me rant on Intel there and how horribly ran they are as they continue to cut their employee numbers, but increase the amount of money they take from the American government, which of course is our money, by the way. But I saw this on Microsoft, and I just want to get your thoughts on this, kind of piggybacking on that. But then again, Microsoft doesn't take our money. But it says, Microsoft is applying for a large number of H1B visas, specifically 14,181 in the second quarter alone. Now, of course, I bring this up because they have just announced a boatload of layoffs, right? But of course, their argument is twofold. One, we don't have enough H1B visas to keep up with demand as far as what they need in America. Also, they're applying to bring Indian citizens here to train for the major investment they're putting over in India, because they want to train millions of people who live in India on AI, which of course, according to your comments in the bottom, and maybe it doesn't happen anymore, but I'm just like, whatever happened to in-house training, and this also tells us if you hear companies complaining that they need H1B employees, but there are Americans out there that actually can do the work, just need the training. Can we start a training program? Can we do that? I mean, would that hurt? All right, if you're telling me, because they're arguing it's not the pay, not we're going to pay any less or anything like that. So if the pay is not going to be any different, why not just keep it in-house, keep it here, right? I mean, makes sense to me, but I want to get your input on that right there. Because, remember, they're cutting back major layoffs across the board, but then you're applying for all these H1B visas. So interesting there. Now, getting into the first question, it says, any new updates on Jim Carson's predictions for the year when it comes to the flow he talks about coming up in August? And there actually was. So here's what he had to say about that.
So both this, call it 2-week period till early August is a kind of risky period. It does not mean we're going to have a volatility event, and that vol is going to massively expand. Actually, vol is very well supplied still. Any initial decline would likely be very slow. But I think outside of the macro kind of squeezes that we're seeing driven by these things generally in this period, I would be very cautious. Again, not for a vol event. That doesn't mean go buy puts and play for a last August type event. It means that the supportive flows that have driven this market higher are diminishing during this period. And as we move through the calendar to August, I would be increasingly hesitant. I think long-term vol has hit its low. I'll say it right now. This is a good time to go buy long-dated calls and get shorter stock for what I think will be a likely pullback. As I mentioned, we're 62 days in to a close above the 20-day moving average. We are up near the 1.5 standard deviation, up in a Bollinger Band above that. You're very likely to see somewhere around -1 to -1.5 in that 20-day at some point this month. And when that happens, the first move will likely be low vol. Everybody will start to buy the dip. But remember, the fuel of this rally to a great extent has been vol compression, A, and B, short interest from hedge funds. What do you think happens when we move down to that 1 standard deviation down or 1.5 standard deviation down? When that inevitably happens, those institutions will start to take down those shorts. Retail will be buying the dip, and now the supply and demand kind of rebalances. And if vol is no longer as compressed into that move, then you can unpin the market and start to get the more structural mean reversion. So I'd be looking very carefully here in the next week or so for the decline to start. If it does not, I want to be clear, then the probabilities move back to after August OPEX to the next cycle. And I really think those are the windows you really need to be watchful for something here. And then once that move happens, you really want to watch kind of how positioning changes at the institutional and retail level. And again, I'm not going to give you exact dates right now, but think exactly post OPEX in August, maybe even expiration in August. And again, right now, we're sitting at a very important moment going into this Friday. I would also be very, very watchful of this Friday into next week, given the Fed meeting on the 31st and August 1st being the critical tariff date.
And so hopefully that makes sense. But I mean, all you're seeing is what he said a while back, where he said he can Summer George. Vol's going to get compressed. We're going to continue to grind up. He saw it going into August, maybe continuing into August up to the OPEX, which, won't be surprising. We have big earnings coming out this week. We'll see how that goes. People are, companies that are missing, getting slammed down. Companies that are mentioning tariff problems, getting slammed down, okay? But when you have the Qs, the top 10 stocks count for 50% out of 100. So you just need those to actually hold up or continue to go. But the other thing is the August 1st deadline. Why did the market pump yesterday? One, because they said, oh, we might have an EU announcement coming this weekend. And remember, these trade deals, nobody's even looking at them. They're just announcing them and saying stuff, and the market don't even care. It really doesn't. It's just like, oh, cool, you say you got a trade announcement? Wonderful. Just keeps on going on. The reason why you know that is because, remember, a lot of these tariffs on these countries are the same as they were when they held the board, right? But they'll deal with that later. If it happens, it happens. If we have, if it does raise prices, if companies do earnings are starting to get hit because they're eating the tariff instead of passing on the customers, they'll deal with that then. Okay, we already had our little shock. And now you just continue to grind up until the volatility starts to come back, starts to push back up. So, that's where we're at right now. And so that's what I was saying yesterday. Just keep looking at that 20 moving average, ride up the winners, right? See what happens when it breaks. That's what we got to figure out. Eventually we'll get a 20 moving average break. Eventually we'll get a 50 retest on all the indexes. Is that going to happen the next 10 days, 20, 30? That's what we get to find out. We know we're entering, obviously, a pattern of weakness. August, September, which month it's going to be, we'll find out. There'll be like a reset, and then we'll come into October, November, and should push up if we follow our normal pattern. So hopefully that helps out. Our next one says, any more laggards we should be looking at to catch up for next month? It seems there has been a nice push into the laggards you have mentioned. Just looking to get into a few more. Thanks. And I'm sure they're out there. I mean, obviously Apple's still lagging. Healthcare is lagging for a reason. We'll get into one of those stocks. But I mean, there's a reason why they're lagging, because it's just disastrous for that whole sector right now. Biotech, which is healthcare, but again, it's kind of like a sector of its own, lagging. But for the most part, if you know any tech stocks, especially have been lagging, let us know, because most of them have pushed through. Financials are just going crazy, right? So at this point in time, when you've pushed up this high, it's going to be a lot harder to find the laggards, right? I mean, Tesla's always wedging, so it doesn't even matter about Tesla right now. But, what's crazy about, that's what I was telling somebody, what's crazy about this market is we're grinding up without some of the biggest names, right? Apple really hadn't participated when you really look at it, right? Meta's been falling lately. Netflix has been falling lately, and the market's still going up. And so, because why? NVIDIA and AMD and Taiwan Semiconductors, Avgo, and then you got Microsoft, of course, hanging up there, which it's a big weight, right? So, you look at those. Google, that was a laggard, finally pushing up as well. That's another heavy weight. So, it's going to be interesting. Can you imagine if Apple actually joins the AI race and that stock starts to push up? Because it's ranked usually second or third now in most major ETFs. So it's going to be interesting, to say the least. Let me know, and I want to ask, in the comments, put some that you think are laggards, right? Or you think, yes, have a good catch up, have a good chart on them, all that good stuff. I'll put them in there. Another one I'll put in there, as I'll talk about tomorrow, is like certain rotation ideas. Like Progressive Insurance is one of them. It's definitely doing something right now, which I'm just waiting for one thing to happen to maybe give that one a shot for sure, because August is usually good for it. But there are stocks where you can find that come August, they usually have really good August months. And so that's another thing. And of course, they're lagging the market. Now, next one says, let me know your thoughts on AI robotics or just plain old robotic stocks, short-term hold, long-term hold. Do we miss the boat? Is it saturated? You're going to have years for this. I mean, honestly, you are. It's not like, oh my God, we're just going to go to the moon. And you can look these up because there's different robotics, right? I mean, there's all kinds of machines they're making. Here's all these names. A lot of these you won't even heard of because they're OTC right now, over the counter. And then some like, oh, Boston Dynamics, I know that one. Well, guess what? It's not even its own stock. Hyundai, I believe, actually owns this. But you can go down this list and start looking at them. Some have good charge. Amazon's a huge robotics company, but that's not where their money comes from right now. They use it to help them in their warehouses. They're not selling them or anything as far as I'm aware. And when you look at some of these names, I mean, you've heard these like Serve, for example. They make like a delivery robot. So there's all different kind of robots. I think people think of the Tesla robot, Optimus, more than anything else. But you can see some of these charts are setting up. Yeah, if it starts to go and gets above this level right here, it could explode higher, right? If this market continues to push the high beta stuff. But remember, all these stocks, man, just look at the falls. It don't take much to tip them over. It really doesn't, because a lot of them don't have hardly any earnings to them, and it's going to be years trying to build this stuff out to make this kind of thing profitable. And you got a lot of companies coming into space, and so a lot of people are just picking their winners and loading up and just trying to be patient. Rich Tech Robotics, or Rick Tech Robotics, excuse me. Another interesting setup here. If it gets above this level, it could absolutely grind higher for sure. And you can see, it looks like it wants to try to break out. A lot of these are looking kind of in that pattern. It's just kind of iffy to me, the timing of which we're coming in right now to go, oh, okay, maybe we continue. I mean, that's why you're seeing all this penny stock money and everything else. But as fine as the ones, you research Tesla, obviously, is probably one of the biggest ones. Problem is, the majority of its revenue comes from cars, and that's been under fire right now. But they pumped Friday because, one, they were way oversold. That was the reason why they pumped, and calls started rolling in. But they also said they're not even going to concentrate on cars anymore. They're concentrating on like FSD and AI and robotics and all that fun stuff. And Mark's like, yay, because you hadn't been concentrating on that before, But we all know Tesla, right? And then, of course, it's Honda, which owns Boston Dynamics. I wish Boston Dynamics was its own company. That'd be nice. I hope they separate them out, because I don't want to buy this stock. I don't want to buy it. It's a car company. I don't want to do that. But maybe they will. Maybe we'll get lucky. Zebra's another one. They make some form of robotics. Some of these people make software. Some make the robots themselves. They do different tasks. Like a lot of them do stuff to do in the warehouse, that kind of stuff. So again, it's just trying to start turning a profit on this, right? I mean, you see Optimus, and as sophisticated as Tesla is, even they said, you're not going to see it till next year, maybe. Well, they'll actually start selling them. Right now, they just use them in the warehouse. So anyway, let me know, and let me see if you have a list of robotic stocks or stuff you like the most. The next one, Peter says, great stuff, Mike. Do you think UNH could have a similar move as Nike? Beating down stock, but low expectations running into earnings with good moves because it didn't perform great, but not as bad as expected. A rubber band effect has to take hold at some point. How much can it stretch? And I'll tell you what I told members on Friday in a little brief I put out every Friday for them. And it was right here. I was talking about United Healthcare. I mean, I've never seen so much bad news for one company, just wave after wave, right? And so it says we have a lot of healthcare companies reporting next week, which we do. So we will get to see if any more rotation in healthcare continues. We saw UNH confirm its investigation from the government is legit. Of course, we already knew this, but it is telling that the company decided to put it out before earnings next week. So far, the company has had its CEO assassinated, another CEO stepped down, an active investigation ongoing confirmed, and pulled guidance for the year. And so the question is, how much is already priced in? And when you look at this, obviously you can see, can it have more upside? Of course it can. I mean, it's been decimated. It is below all its moving averages, and especially its 200, its 200 week, all that stuff way down there. Even the 50 really is below its 20. It's below all the anchor VWAPs. I mean, it is a mess. But we did finally mitigate the entire daily fair value gap now, so I can take that away. We'll move the 200. You can see how far up it is. I mean, it's just a mess. But, looking at it, you got all these anchor VWAPs to get through, all these moving averages try to get through. So can they come on and surprise us during earnings? Of course they could. Because the funny thing is, like next year, they're getting more return, right? And more reimbursement, excuse me. And so, that's actually a good thing. The question is, what's going to happen over the next couple of quarters? That's what people are wondering. And yes, is there more downside to be had? Absolutely there could be. I mean, I don't know what other kind of bad news can put out there at this point in time, but if they don't reinstate guidance and they're sitting there going, look, we just can't, really pinpoint what we're going to be doing, that's not a good thing. I mean, it doesn't really instill people to go, yay, I really want to buy into this, but just to get to like the 50 moving average up there is quite a ways. And so, a lot of people are hoping that's what's going to be the case, and that's what it is. And again, I hope it does. I hope it pops back too, but down here, a lot of these healthcare companies have already taken out their 2020 lows. UNH, not even close. And so I already know people saying, man, if it falls below that, they're going to be loading the boat, which will make total sense, right? But again, you also have other healthcare companies come out next week too, and if they pull guidance, then you see what happens. Every time one of them pull guidance, it pulls the stock down. And remember, Nike just didn't bounce. Nike's been in the gutter for a long time. That's what usually happens. You get down the gutter and you stay in the gutter for quite a while, and then they go, all right, you've had enough. This just happens to be healthcare and insurance companies, which are usually cash cows. The other question is, the shoe's got to drop is, unless they start bribing people like, they've been known to do. Remember, they're being investigated for Medicare fraud, which all of them commit. But the company itself, usually you get hit with a big fine when they figure it out, right? And so what's that news going to do? So that's what you're waiting to see if this is the bottom. I mean, it's hard to call that one on this one because it ain't been down there that long. I mean, go back and look at the Nike truck and all those other charts where they just stayed in the gutter. Look at Pepsi and stuff. You usually spend a minute down there, and so we'll see if this is finally the bottom. And I mean, I hope it is, because we're coming into a really bullish month for healthcare. Usually it's a good month for healthcare coming into this. So we'll find out. Let me know what you think. Now, the next one here says, hey, Mike, was hoping you could go over IBM. I honestly see an amazing opportunity for retail. Would like your view, though, my man. Thanks. Another victim of earnings, you can see, and it did the same thing we talked about on the other video, right? It rode that 20-day up, broke it, come up, retested twice, failed. What happened? End up having their software revenue missed, okay, and that's a big part of their company. So, revenue and gross margins in the software business were below consensus as well, and so, but they did raise cash flow guidance. That's positive. So, we're going to have to find out, right? It's being re-rated right now. It's coming into support right there. And when I pull it on this thing, the first thing I sit there and go, wow, this looks like a perfect channel right here. And this is just doing like a lot of these, right? I've showed you NVIDIA and all these other stocks, just pulling up these channels, bouncing back and forth, and goes back to, looks like March of actually 2023. So, you can pull it down even farther if you like. And so, yeah, I mean, it couldn't come down the bottom channel. Yeah, if it holds this channel, when you break a parallel channel, that's pretty powerful. So, again, it's at support now, but you don't want to break the bottom of the channel. That's your risk right there for sure. I have a 3-day rule. It's only been 2 days for IBM before I'd even touch something like this. But again, if you can start building back out above that 260.91 level, it can fly back up. Remember, everybody thought Tesla was dead as a doornail. And I said, look at that big gap above. Gaps are amazing. And it had a huge day on Friday and almost filled the entire gap. And they had a terrible earnings call. And so, again, I'm not going to get into IBM's fundamentals. I don't own the stock or anything like that. And so, you seem to know a lot more about it than me, but I'm just looking at the charts, right? It's oversold for sure. And so we'll see what happens on the third day. Are they going to keep punishing this one, or do they start to build out a base and have a market structure change to the upside, right? That's what you're looking for on this one, but I wouldn't touch it before the 3-day rule. Now, next one says, how about your thoughts on GEV? I talked about this on Wednesday or Thursday, and I said this is one of those ones, it's a utility company, and it's outperformed a lot of tech stocks. And you have to keep your eye on it. You have to mark your levels out when it has huge sell-offs, especially. This one is a big one. It's a big mover, and I never thought I'd say that about a utility company. But yes, I mean, I was talking this thing like it was like 165, 170 or something a year and a half ago maybe. And it likes to coil, take big moves, coil, big moves, and boy, does it have hard bounces on the sell-offs. I mean, it's up 252% in less than a year, and it's a utility stock, right? And so they had good earnings and everything. You can plainly see where supports are, which is pretty far down. This thing just totally moved up. It moves like a tech stock. It just continues to bounce off that 20 moving average. Not even sniffing the 50 moving average right now, as you can see. Did the same thing to the left. So at some point in time, it will start consolidating, and which I've seen. Utilities is just a different thing now, right? With all this different stuff with AI and everything else. They're not moving like they used to. So you can see clearly on the earnings call right here, they reported strong earnings results and raised its full year guidance, with its power segment achieving 9% organic growth and 55% incremental margins. So if your power bill is going up, there you go. Now, next one here says, can you chart DHI? Thank you. And this is the home builder, DR Horton. When it comes to home builders, I've said this before, there's just no rhyme or reason to me when it comes to these stocks. So I look at the chart and say, okay, is that resistance right now? You can see right there. If it can get above, hold above, I guess, 152, 52, that is right there. Start building a base, it can go higher. Maybe they're front running rate cuts and stuff. That's what happened last time. It ran up, they cut rates, they started tanking and continue to tank all the way into the March of 2025. And it's got to bounce with all the other stocks since the April low and stuff. And you would think, wow, how are home builders up? I mean, the sales, and I mean, nobody's purchasing homes. Nobody's really trying to sell homes when you look at it historically. But, these kind of defy gravity a lot of times. So I'm going to put that line there, which is like 158.23, I believe, and say, let's see if we get rejected there. If we continue to move up here, because they got that pop on earnings. If it does, obviously your trend line is going to be your best friend in support. You can see by the volume range, volume profile over there. And that's all I'm going to say when it comes to DHI. Now, next one says, I hear you say fair value gap and came down here to pick up liquidity. I see the chart in the area you're pointing out, but I can't figure out how you determine the zone range for those. Simplify to you as well. I was 0311. So when you look at the chart right here, Tesla is a prime example. All right, we talked about this many times. It is nothing but a 3-candle pattern. All you're looking at is the body of the candle in the middle. What do you see there? that body is not covered on the left or right, which means there's an imbalance. You had a big push up, more buyers than sellers. Left is imbalance. Normally, the market will find a way to come back down and mitigate this imbalance. What do you see Tesla do? To the penny, which normally is not what you see, but it came down to the penny and it mitigated it, right? And that's where it bounced and it held, okay? You've seen, I've showed you this so many times, hundreds of times on Tesla for sure, but a lot of different stocks as well. And so we can get rid of that one, okay? So that one is mitigated. And, you know, we'll go through a few other patterns on here. And we come look at this one. 1, 2, 3. What do you notice about the middle candle? Nothing's covering its body, which means it is an imbalance. Now, of course, this is a while back, right? So when I did this, that box right there wasn't so small. It was pulled much further down because Tesla had continued to fall, as you can see. And so what happened was that was going to be the draw on liquidity. What ended up happening? It just went day after day moving up. You can see right there, pulled into it, mitigated the majority of it. There was your liquidity draw. Then we started to move back down after that. Okay, I mean, so just remember, 3-body candle pattern. You're looking at the middle candle to sit there and see if it's covered up on the left, right, or a combination of both. If not, it is an imbalance, and most likely, especially on a daily or weekly, you will see us come back to revisit to pull liquidity from there and mitigate that imbalance. Okay, is this right here an imbalance? No. Why? The left candle ain't covering that body up, but the right is. See that? 1, 2, 3. That is not an imbalance. Okay, and that's why you don't get a whole lot of them. But Tesla, you get a bunch because it tends to have these explosive moves up. Okay, you see right here, 1, 2, 3. That's not an imbalance because you can't see the wick on the right there. But that wick on the right can be the wick of the body. Come up and cover that up. What about this right here? You got 1, 2, 3. That is an imbalance. That's an imbalance. What happened? We came back up and we mitigated a lot of it right there. And then we mitigated the rest of it farther to the right. Okay, so that's what I'm talking about when I say imbalance. And with Tesla especially, you can kind of just point those out. But you're not just looking at, let me be very clear about this. You're not just looking at an imbalance or a fair value gap, whatever you want to call it, and saying, oh man, that's where it's going to come to for sure. What you love to see is it have either a trend line right there as well, corresponding with it, or a support line right there as well. Like that's what you're really looking for. Maybe a moving average or something. You can see all those imbalances. Good Lord. And it came down and mitigated. Like that's what happened. And so not only is that imbalance, you got a lot of gaps right there too. So that's why I have others marked out right there. But it's also just looking like those up top, they correspond with a trend line. And so that really, really gives a confluence, which is what I like to see. So hopefully that helps. Now, this is the last question from Dr. Marcus. I think it's really more for you guys, but I will answer it as well. With AI likely being the real deal, replacing humans will be inevitable. And what time frame? That's anyone's guess. That being said, I have a theory that astute investors and paranoid employment populations will keep this bull run going for many years to come. The theory is if we are going to be replaced, we might as well invest in these technologies replacing us. Since we won't have any alternatives, we won't have a choice but to invest in these huge AI companies leading into an insanely long 10 to 20 year bull run. Potentially, just my opinion. What are your thoughts? Well, the simple answer is yes, of course. I mean, even once you're replaced, you'll be investing if you can. But remember, a lot of people that are going to be replaced, they don't have any money to invest. They're living paycheck to paycheck anyway, and most of them have already probably been replaced. They're going to get replaced. So, yeah, of course. I mean, and it's an interesting spot. I can't wait to see how it works out. I mean, again, you just have productivity go up. The biggest costs for these major companies go down. And the question is, who's buying, right? Because we've never had technology that can literally replace us. And so, I mean, really fast. And so that's the biggest problem you have. Again, when you're selling robots, just look at Amazon, prime example. Watch how much their employees go down over the next 5 years. Watch the employee headcount dramatically decrease over the next 5 years. Okay, it's already decreased because they basically overemployed, so to speak, in 2020, 2021. But you're not putting out 1 million robots, 2 million robots, all that stuff. They continue to keep hiring your biggest expense. That's not how it works. And so it's going to be interesting. It'll be a time we've never seen before. The government's going to have to figure it out. They're always too late. And they're too busy getting bribes from these companies to do anything about it anyway. So, we'll have to find out. So Anyway, hope you guys got some out of it. Let me know what you think down the bottom about those as well, especially that question, or any laggards you're looking at. And tomorrow's video, of course, will be setting up the week, which we have a very, very busy one ahead of us. So it'll be a jam-packed video. So please hit that like and subscribe button on your way out. Think about signing up for membership. Unless the McDonald's combo at $7.99. Just hit the link down the bottom of the description is the very first one. And I'll see you guys tomorrow for another fun one.